بسم الله الرحمن الرحيم والحمد لله رب العالمين والصلاة والسلام على سيدنا محمد وعلى آله وصحبه أجمعين. بالنيابة عن الإدارة التنفيذية للشركة الألمانية المتحدة للتأمين، أود أن أتقدم إليكم بالتهنئة بمناسبة شهر رمضان الكريم، أعاده الله علينا وعليكم جميعا بالخير واليمن والبركات. Good afternoon, everybody, and Ramadan Kareem. We welcome you to our discussion session. My name is Musa Al-Amri, Investors Relations Manager. First of all, we would like to thank the CMA and MSX for organizing this session. This session is designed to focus on the audited financial statements for the year ended 31st December 2022. Now I will hand over the talk to Mr. Shiva Kumar, the Deputy Chair, CEO, to take you through the presentation.
Good morning, everyone. We have a team which is represented by Mr. Muthukumar, our CEO, CME, Sri Nasir, Lata, our finance head, and Sanjay, the medical and life head. So we'll start with the presentation. The last year was a tough year for not only us, but for the insurance companies in Oman overall. The environment was fairly competitive, and also we did see a spurt in claims post the COVID easing off. So the motor and medical portfolio did see a challenge. And as management team, our focus remained the same, and there is no change in strategy last year, since our overall goal was to maintain consistent dividends with a pleasant customer experience for the customers, whether it is our vendors or the final customers. And this philosophy is ingrained in the management team, and we have been consistent as far as following and delivering on this particular mission statement is concerned. Now, additionally, you would probably take note that we have won quite a few credentials or awards over the last few years. Last year also we won some award. Musa, next slide, please. And we did get the mid-cap segment category award of the IVA Awards, which we've been consistently getting. And I think the evaluation criteria is fairly stringent, 7 parameters, which really slices and dices the operation. And we are glad that we have been identified consistently on that award segment. In addition to that, quite a few awards over the years, just as an update for you. Next. As far as the company's history is concerned, ours is an old company, 1985 establishment, and with initial capital of 2 million, but this was raised to 10 million. And we met the 10 million criteria for quite a long time, even before this got amended by the regulators. We meet the contingency norm requirement of 10 million, as well as the legal reserve requirement as laid down by the regulators, and no further appropriation on the reserves towards these heads are required. And therefore, it is very paramount that we maintain a decent return with regard to the operating profits as well as the investment profit as a combination. Our board, our chairman, Syed Salim bin Nasir Al-Busaidi, he has been there since 1985. He's been the guiding spirit, and all our directors, even in the last year, remain the same. And we had the benefit of their guidance through the year. So a consistent board and also a senior management team, which is on an average greater than 8 years. I think the only change or addition was Mr. Musa, who joined us in the last 1.5 years. And we thank him also for his contribution in the last years. As a snapshot, if I had to give you the numbers, the gross premium return last year, our premium was 32.19, a growth of 6% over top line on the gross premium return. But you would also observe that the net premium return had changed. And this is primarily because there were certain underwriting decisions which were taken after the developments in the first 2 quarters, where loss developments were greater in certain portfolios, and we had to adjust the portfolio mix and re-strategize on delivering better in certain lines of business where margin could be slightly better. In spite of the intense competition, we did take certain underwriting decisions. We segmented our book, we revised our segmented pricing on the motor, and reviewed the medical accounts. And with the overall strategy of maintaining a consistent dividend return, we had to do the underwriting measures which were paramount. I think we are glad to report that whether it is our front-end customers, more or less we have maintained a very good renewal ratio in excess of 95%. And our reinsurers also have been supportive to us in relation to the market. I think we take pride that it's a good balance as Oman United, and we have a continued support of our reinsurers, and which lays emphasis on the continued and the long relationship which we have been having. And SCOR is our primary reinsurance treaty underwriter. In addition to that, we also have Munich Re in our program, which is also a very good security to have. In this financial kind of scenario, I think we are glad that our reinsurer support has been there and they have stood behind us. And we don't have any challenges as far as the reinsurers are also concerned. Okay. That's it. Next. Yeah, as a summary, our total assets 108 million, more or less stable. Paid up capital same as 10 million last year. And shareholders' equity also has been stable in the range of 30 to 31 over the last 3-4 years. Total investment is 63 million, 83% in deposits in bank, and overall net profit for the year was 2.75 million. This has to be seen in the backdrop of the fact that we did make, as I stated, that underwriting changes were done, and therefore the portfolio mix of Oman United has changed to a favorable way. Our motor portfolio runs at about 44-45% as on today. The non-motor portfolio is about 47-48%, and the rest is medical and life. So the portfolio mix change has been good, and this also will result in a change in the net premium return and the net premium earned, which is a driver for our overall profitability. And even though you see a slightly lesser net profit compared to last year, the portfolio mix has changed, and that is why it's a combination. Overall, our profitability or net profit was driven by slightly higher losses of about 800,000 on an overall basis, from 9.6 million to about 10.4 million. And the net premium earned for the company, which was last year, 21, 15.886, has come down to 14.076, exactly what I explained on the change in the portfolio mix. So overall, our underwriting profit margins were lower, but it's more or less stable. We have been consistent dividend paying company. Yeah. So overall, the company has maintained a cash dividend consistently, 41 million since the beginning, and the last 13 years, about 32 million. In the current year proposed 35% is subject to AGM approval, and we hope to have the AGM on 30th, and we will know the results finally based on the AGM approval. Our company continued with the same 12 branches as last year. However, there has been some change in the tied agents. It has moved to 32 now, against 26 or 27 earlier. And we deal with insurance brokers also in Oman, and our relationships have been strong, and this is reflected in the retention of the customers, which has been fairly good. This figure is slightly. Any questions now? Any questions till now, please? Okay,
Hello?
Yeah, so we'll go ahead and maybe reserve the questions for the last. Yeah. As far as the comprehensive income is concerned, 31.9 million. I don't know whether the figures are.
This is the gross premium.
Yeah, gross premium earned 31.9 million against 32.7 million last year. And net premium earned was 14 million against 15.88 last year. Overall, as I said, net profit, including the, we also have an automobile garage. And when you include all the underwriting result was 4.14 in addition to the automobile garage results. Investment income moved up from 3.1 to 3.7 million. And from an overall general and administrative expense perspective, again, 5.3 million last year. The 2022, we ended with a 5.1 million on the general and administrative expenses. So there was some checks in the expenses also, which were put forth. Overall profit against 3.9 last year, 2.75 was the net profit for the year. Statement of financial position. Yeah, Lata will take you through the balance sheet.
Good afternoon. Our statement of financial position as of 31st December 2022. Cash and bank balance 519,000 as against 773. Investment property 2,020,000 as against 2,076,000. Investments, which is inclusive of equity plus deposits, 61.4 as against 60.9. Then premium and insurance balances receivable 5.5 as against 8.1 million. Other receivables and prepayments 752,000 and 900,000. Property and equipment 920,000, 996,000. Right of use asset 299,000, 305,000. Reinsurance contracts assets 36.9 million, 34.3 million. Intangible assets other than goodwill 126, 192. And this is mainly consists of our software. Total assets of the company 108 million as against same 108 million of 2021. Our total equity and liabilities 30.16 as against 30.82. In that accumulated profit was 5.6 million as against 6.3 million. With 6.3 million, after that we made a dividend payment of 3.5 million during 2022. Insurance liabilities, which consist of mainly technical reserves, 60.2 as against 59.1. Due to reinsurance balances, 9.6 million as against 10.4 million. Lease liabilities 322,000, same as of 2021. Other liabilities 7.4 million as against 7.1 million. There was a short-term loan for 181,000. Deferred tax liability 59,000 as against 128,000. Income tax payable 448,000 as against 753,000. So total liability 108,000, 108,000. And net assets per share 302 paisa as against 308 paisas. Thank you.
Okay. Yeah, composition of strategy for investments. If some of you recall, I think our earlier strategy about 1.5 years back, we were mainly focused on investment into the fixed income securities in view of the overall market situation. Last 6 months, we have relooked at that strategy and we propose, we've been working on correcting that to some extent, while the overall investment is in the range of 64 million, 63 to 64 million. But our equity investments, depending upon the opportunities which come through during the year, we'll be investing more into the equity investments, and we are stable on the fixed income as far as Oman United's investment strategy is concerned. Overall, the consistent investment figures are in spite of the cash dividend payouts of 32 million between 2010 and 22. And all these while, I think the backdrop, we have to always see that the equity market has been pretty volatile. And we are also constrained to maintain a consistency as far as our operations and results are concerned. Next. While we've taken you through the balance sheet as well as the investment pieces, I think two important items as far as investment in fixed assets is concerned is our head office property, which is in Alquare, as well as a garage property in Ghala, which is 20,000 square meters. Both of these are at book value, and there is an unrecognized appreciation of 2.28 million on the head office building and 1.99 million on the garage building. So overall, there is an unrecognized appreciation of both the properties of about 4.2 million. Next. We are a fairly decent sized company in the overall operations, and our Omanization criteria to meet, we are much above the stated goals. And our efforts have been in the last 1.5 years. We have made a lot of effort towards investing in training, exposing people, and also increasing our resource strength. And we are glad that our results have been decently good as far as delivery on this count is concerned. Overall, the shareholder equity, as we stated, 30.1 million, that has been stable. Retained earnings is about 5.6 million. Solvency margin is 19.86 against 8.6 last year. Primarily, this has been because of the new risk-based capital model of CMA implemented in 2022. So this is it's a good indicator as far as the performance of the company and the strength of the balance sheet is concerned. Being a composite company, we are present in all kind of lines of business, general, life, and medical. Yeah, we do expect if the opportunities are for, and we get the regulatory approvals, and with the compulsory medical coming in, that may be a kind of area we have to be looking at from the growth perspective. Overall, from our underwriting margins perspective, we have been using the reputed actuarial firms over the years. Over 8 years, people have been there with us, and we are glad that we are conservative in our policy of reserving, and we are glad that our consistent returns have been there because of good reserving methodology and a review by peers, which has been consistent. So while we see the backdrop of increased competition in the market and probably the growth is getting a little stifled, but in spite of all that, the change of composition augurs well for the company, and we do hope that more opportunities will come our way. However, there are challenges for the company, and pricing pressure certainly is there. In addition to this, the IFRS 17 implementation, which is a fairly intense exercise which has to be undertaken by all the insurance companies, since it needs to get validated in a different fashion, and the reporting of numbers will also change. The methodology will change, and therefore this is a major challenge in 2023, and we have to work harder as a team to ensure that we are able to consistently give the results in the required regulatory formats. Overall, in 2022, when frequency of losses had increased in the first 6 months, I think now it is stabilizing. However, the COVID impact was certainly there earlier, and we could see overall a 30 to 40% increase in the accident ratios in 2022 in the first 6 months. So while it is slightly tapering off, but overall the accident ratios remain high. Shahi, as a catastrophic event, was big for the market, and this did involve a lot of attention from the reinsurers world over. And they are very keenly watching as to how the results and the impacts are. As far as Oman United is concerned, I think whatever we projected, our actual Shaheen projected losses were much lower. We initially projected about 3.2 million. I think we'll be in the range of about 2.6, 2.5 million. And we hope we have been getting support from the reinsurers on that count. And ours, while our overall market share may be 9%, our overall impact on Shaheen for us, for the market share was less than 4%. There is a challenge with regard to premium collections in the market, and we as a management team work together, focusing on brokers, agents, as well as customers. And we had a revised kind of changed structure in the team to make sure that we are able to recover the money which is due to us. And we are glad that as on 31st December, our actual collections were much better than we initially thought, and because of the focused effort. And I think as far as overall cash flow is concerned for us, it did not have a major hit in comparison to the others. So as far as future outlook is concerned, yes, our segmented approach will continue. It will be the change in the investment piece will come over with a more investment kind of focus on equity. And we are already working on those opportunities in the last 6 months. Mandatory health insurance could be an opportunity, and increasing regional market presence would be our challenge for the 2023. Thank you. Anything?
That's it. No.
Thank you. We are open for questions.
Hello.
Yes.
Hi. Good morning, team. Thank you for the presentation. This is Bishan Bhalla from Vision Capital. Just a couple of questions. Thank you for the presentation. You mentioned IFRS 17 implementation is a lengthy process. How long would it take before you complete this exercise?
One thing, Bishan, your volume is low.
Okay, 1 second. Let me try.
Bishan, are you able to hear us?
Can you hear better now?
Yeah.
Hi, can you hear me better now?
Yeah. Bishan, the work is underway already on IFRS 17 implementation. We have appointed consultants. They are already, we have shared all data, various interactions have happened. We are working towards maintaining the schedule as laid down by the regulators. And we hope to give our IFRS 17 numbers also sometime in April. And be that as it may, the effort is towards fine-tuning this particular piece because there are a lot of data challenges, and this will probably get ironed out in 2 quarters or so, as far as data challenges, etc., is concerned. I hope I answered your query.
Yeah, noted. The next question is, with regards to the operating performance, and two of the key parameters are which are sticky is the competition and the pricing pressure. I understand the loss ratio jumped up in, which was a base effect, and Shaheen, etc., had its own impact. But we've noticed there's been stiff competition when it comes to premiums, which has cooled down a bit, but it's still quite intense. And pricing. How do you see these two panning out? Because OUIS, firstly, I would like to just mention that the company has been fantastic over the last several years. You've made money on the operating side as well as on the investment side. But last year was an aberration where operating losses were there. The investment book is robust, and that's what led to overall profitability. But if you could just give us your sense on how you see the operating income or the operating profit panning out in 23 and beyond, and how the competitive landscape is shaping up currently.
Yeah, I take your point. I think, yes, pricing pressure is certainly there in the market, and there are challenges as far as the pricing piece is concerned. However, I think change of portfolio mix, looking at segments which we are keen to write, and ensuring that our reinsurance costs are also kept at the margins in a controlled fashion. I think that will be the driver. But I think the pre-COVID, the base effect of pre-COVID is not something we should compare. So overall, the numbers may not be as rosy as COVID, pre-COVID, but our efforts are on towards maintaining consistency.
Okay, and do you see this turning around sort of in let's say first half of 2023?
I think we have to be keenly watching the reinsurers' reaction as on the 1st July treaty renewals, not only for us, but for the market per se. And I think that we'll be having a more clearer idea only after the 1st July kind of treaty renewals.
Okay, noted. The next question, I understand that you would not be giving forward-looking statements, and I respect that. But one of the pleasant surprises was the dividend payout for 2022. And now, when I made my initial comment about OUIC being a great company, it's one of the few companies that met its contingency reserve, has enough adequate retained earnings. So is that a trend we would see going forward as well? Because you mentioned that cash flow is also an issue when it comes to receivables, etc. But sort of, do we see this number sort of being the baseline from sort of a distribution point of view?
No, it will be very difficult to say at this point of time. Yes, of course, we wanted to reward the shareholders, but this year, CMA has moved out to that risk-based capital model. So the solvency margin we are having, surplus. Moreover, our equity is almost answered 30 million, and we are writing 32 million reals of premium income. So we thought that okay, this is capital is on the higher side for what our volume of business that we are doing. So because of that, board has recommended 35% dividend. But next year, inshallah, we will see our best. It's we have to see our cash flow and what is the future opportunities available. We have to take into consideration many factors. Okay, not that just keeping the money and if you are going into deposits. Now, fortunately, interest rates are keep going up, and we are also moving away from fixed investments or deposits in equity. So this is what I can say at this point of time. We won't be able to give you that okay, every year we will be able to do more than the realized profit of the year.
I understand that. The next question is, with regards to your return on equity, is that a metric that sort of the board or the management looks at, very seriously, or sort of is that a big parameter for you guys, or is it more driven by your receivables and your underwriting results and your profit? If you could just shed some light on that.
See, from the beginning, we are always, a conservative company. We look at always quality of our portfolio. We don't go for quantity. Whenever the underwriting people, when they do underwrite, they make sure that, we are not going overboard. We have a burning cost, which we will not be, whenever any new business comes or any opportunity comes, we won't be able to go below our burning cost. So wherever we think that there is a possibility of making profit, we will be for it. So this is what I can say. On the investment side, we are, we have been very conservative, but slightly we are going into the equity markets whenever the opportunity comes in. So together with operational cash flow, operation has to generate cash flow at the end of the day. So when the operation is generating a cash flow, we will be more aggressive on the investments also, maintaining our fixed investment portfolio plus some other equity investments. So with this, our return on equity will be more or less stable.
Okay, noted. Thank you, gentlemen. Thank you. Wish you all the best. Thank you, team.
Thank you so much. Questions.
Any other questions?
Nobody's. What was this weapon? What was it? I think I was watching. Okay, thank you so much to all of you for attending this presentation, and we are happy that questions have been asked, and I hope we have given sufficient reply. And inshallah, we will try our level best for the future in 2023. Thank you so much.
Thank you, sir. Thank you.
Thank you very much. Thank you.